it's not positive. It's not great for sentiment. We think about how, especially in the case of India, this is going to weigh on how people are viewing the global recovery, especially the divergence, what we're seeing between developed and emerging markets and their ability to control the virus and have access to the vaccines. I mean, the fact that it's so hard to contain these new mutations of the vaccines and they do spread so rapidly just illustrates the challenges. But I think it's important to recognize that there are those vaccines available. They are getting distributed. And so these numbers will start to come down eventually. I mean, there's a huge humanitarian cost in the meantime, but we should start to see this come under control and we'll eventually start to see the reopening and the recovery of these economies. Until then, we do look at the global economy, though, and say we are seeing that positive recovery, but it's just very uneven at the moment. It's US-led, we're followed by Europe, and emerging markets are just going to be a little bit behind that at the moment, more the ones outside of China, at least.
And speaking of China, you're still positive on the China play. I mean, we've had some fresh industrial profit data out this morning, but what is mostly underpinning your investment strategy there?
Well, the approach to China has to be a long-term one, and the markets have had a bit of a tumultuous year when it comes to the performance, and there are these increased concerns around the credit risks, around the regulatory environment changing. But fundamentally, if you look at how China's performed over the last year, the fact that momentum is strong, even if sequentially the growth momentum is slowing, China's making the right moves in terms of controlling that credit growth, addressing some of that financial instability that could creep through, and really focusing on that long-term view in terms of how it's going to drive the quality of its economy and economic growth going forward. And so that is really a focus on the demand side in terms of the consumer demand and building up a domestic demand base. And also on the supply side, thinking about the technology and productivity improvements that are required. And it's these factors that actually keep us quite positive when we think about the outlook for the economy. It has handled the coronavirus quite well and is definitely becoming sort of the first out of this. And we do think it's going to bode quite well for thinking about those long-term things around consumers, technology, and just simply the growth that we're going to see in that economy.
Right, but how disruptive, Kerry, good morning, Tanvi joining this conversation, how disruptive could this resurgence of cases in emerging markets, especially a market like India, be disruptive for global supply chains? You know, a lot of what the US and Europe consume comes from ASEAN as well as India, not so much from India, but even so, the fact is that, you know, we are looking at very intricate supply chains. And so to that extent, how much could the severity of the situation be for global trade?
Well, certainly, I think when it comes to India, the probably global implications are more around the oil price and what it's doing there in terms of the demand. For the supply chains, we think about the sort of ASEAN economies, we think about Taiwan, Korea, and the implications there. You know, you're already going to see this pop in inflation over the coming quarters, thanks to those bottlenecks that have been created. And I guess the risk there is that those bottlenecks last a little bit longer, that inflation is a little bit more persistent than simply the next couple of quarters before fading back. And you see some upside risk to bond yields, which would then flow into thinking about the performance in equity markets. The key to that will really be thinking about how permanent it will be. And even if it does linger a little bit longer, again, those effects will fade out. So we might get a bit more strength in inflation over the coming quarters. But again, the thesis would have to be that those eventually will fade, that demand will, if demand does pick up, that supply will increase to offset that. And eventually those bottlenecks will be faded over the course of the coming year. So this definitely creates a risk to the upside in the inflation outlook. But again, I think the lesson learned from many of these economies which have helped or dealt with many waves of the virus is that they do have the regulatory processes in place. They can lock down their economies for short periods of time and actually move beyond these cases and thinking about a blowout, the number of cases we've perhaps seen in India not being replicated in other markets.